So in this video, we're going to be going over HTF zones, what they are. Essentially, they're pretty much everything I already taught you, just on a higher time frame chart. So it's going to consist of those fair value gaps, those order blocks, those equal highs, equal lows, the inverse fair value gaps, and then just levels of liquidity just on a higher time frame, really. So let's get into that. What that looks like, we have this 4-hour bullish fair value gap. Yes, it creates a imbalance, but we don't see a immediate retrace into it. I mean, we do see a retrace into it on the next day after it was formed. But after that, we don't see it retrace into it until a few weeks later. Why? Because it's a high time frame confluence, not a low time frame confluence. So on these higher time frames, it takes a lot longer for these candles to form. Like for these 1, 2, 3, 4, 5, 6. For these 5 candles, it took an entire day to form. With that being said, that's going to leave us with these confluences that take longer to be retested but hold much more significance since it's on a higher time frame, right? So we have this bullish fair value gap that gets respected once, twice, and then invalidated on the third retest. We have another big bearish fair value gap right here off of the wicks, just like that. And we see it's respected once, twice, 3 times, 4 times, 5 times, and then finally on the 5th time it got retested. It does close above it, so it does actually invalidate it. But even though it does invalidate it, what do we see right here? We see a order block get formed from this candle right here. We see a bearish order block get formed. And that's all these HTF zones are. They're just high time frame confluences. So it's going to be another short video because we're getting towards the end of this learning phase of the Combine, since you've pretty much learned everything you need to know. So I don't want to make these too long to bore you out. But that's all HTF zones are. They're just high time frame confluences. And that's all they are. They're just everything you already learned is on a higher time frame, so they hold more significance. Like this, bearish fair value gap. Just like this, bearish fair value gap. Just like this, bearish fair value gap. These are all just high time frame zones that hold more significance since they're on a higher time frame. Just like that one. As we see, you've been pretty bearish as of lately. So all of these are bearish confluences, of course. But with that being said, that's what a HTF zone is. It's just either a fair value gap, an order block, a inverse fair value gap, or a equal high or equal low, or even a level of liquidity, just on a higher time frame. That's all it is. Like we have equal highs right here that get respected until they're not by this candle, close above it. We have more fair value gaps right here that get respected until this candle closes above it, and that forms actually this bullish inverse right here. Yeah, these all get respected. Why? Because they're on a higher time frame and they hold more significance because it's on a higher time frame. So since it's on a higher time frame, it causes more orders to need to be placed that to make the confluence show up. Like we have this bullish fair value gap right here, gets bounced on 3 times before it gets invalidated. And that's all the HTF zone is. It's just a confluence I already taught you, just on a higher time frame zone. Like for example, let's go to um let's go to this one right here, right? we have a big bullish fair value gap form on Wednesday, right? And then the next day on Thursday, let's cut back to this on Thursday, right? Come down to the 15-minute, and let's see where we're trading at right now. It looks like it's an Asia session right now. Yeah, right. Yep. So we'll let this play out. This is Asia London session right here. Letting that play out. Come 9:30, that's New York Open. That's when we're on the charts trading. And here's what we see. Yep. We see price break structure right here. Starts going to the downside. And why do we see that? Because we have a candle close beneath this recent low after bullish price action was in the market. So what do we see here? We see price moving, and we can expect it to fill out this imbalance by coming into this 4-hour fair value gap. That 4-hour fair value gap is called a HTF zone because it's on a higher time frame chart. That's all that means. It's still a fair value gap. It's just on a higher time frame chart. So we'll let that play out. And we can see price hasn't tapped back into it yet, but taps back into it and it respects it because it's on a higher time frame and it holds more significance. Right? That's all an HTF zone is. It's just a confluence I already taught you, just on a higher time frame. Simple as that. So that pretty much sums up this video. Short, sweet. It's because we're getting to the end of this combine. So with that being said, make sure you took your notes. That's all HTF zones are. They're just confluences that I already taught you on the higher time frame. That's all they are. That's all they are, really. Like right here, we're on the daily chart and we see price comes back into here and then does what? Respects it and bounces back off to it. We see right here, we have a bearish fair value gap form. What does price do? Comes back into it and bounces off of it, right? And that's all an HTF zone is. It's the confluences I already taught you, just on a higher time frame chart. Simple as that. So make sure you took your notes. Now, what I want you to do is go onto your chart and spend at least 30 minutes. The longer, the better. Go and mark out your confluences all the way back. Doesn't matter how far back you go. Just keep going. Keep marking out your confluences. The more you mark them, the more natural it becomes to you to see them as they form in the live market while you're actually trading. Hope you guys enjoyed this one. I think we're going to be going over how to find a daily bias in the next video. So that's a pretty good one because that helps you find your narrative for the day. So like I said, go back to the chart, mark out your confluences, all the ones I taught you: fair value gaps, inverse fair value gaps, order blocks, liquidity, equal highs, equal lows, and your HTF zones. With that being said, that's going to be the end of this one. And on to the next one, guys. Hope you enjoyed.